Hi, everyone. It is Danielle Marie from the One Realty here in Austin, Texas. I'm here to give you our weekly update of what is kind of going on in the Austin market. I know right now, interest rates, we went to like a 7.1% according to the Mortgage News Daily. And I have to say, we got a client under contract, my seller, partly because the buyer said we were going back and forth, and my seller said, you know what, I'm going to make this deal happen because interest rates, and we don't know what's going to come up. We don't know what's, happening next. So right now is a time, especially if you are a seller, to really pay attention to the market and your pricing as well as negotiations. And then at the same time, if you're a buyer, you might want to just sit back and kind of watch to see what happens if you have a little bit of purchasing power. With that being said, we're going to dive into this week's numbers for the Austin real estate market. We're going to talk about what's active, what's pending, what's sold. And if you stay in long enough, I will give you a glimpse of where we were in March and where we have ended up in April. If you're just joining me, feel free to leave a comment in the as we go through, feel free to leave a comment and let me know, as well as feel free to follow and share so that you can find me in the future. But without further ado, I'm going to hit up and we are going to start with this week's numbers. Okay, so if you haven't met me, I'm the founder of the One Realty here in Austin, Texas. I take a data-driven, all-in-one approach to real estate. So we talk a lot of numbers. We talk a lot of strategy and negotiations to set up. So first and foremost, for our active listings, you're going to see our active listings right now. And I do weekly snapshots. So I go Wednesday to Wednesday. So I'm always comparing. And the reason for Wednesday is because Wednesday, you normally have all of the listings that have gone under contract from the weekend and before all the new listings hit the market, typically on Thursday and Friday. So this week, we are just shy of 3,000 listings as of Wednesday. Now, I can tell you, I just snuck a peek before this just to see where we are, and we are over 3,100 listings now. I mean, it's big. So the number of listings that are getting dumped into Austin right now, that's when it comes to strategy when you're a seller and also when you're a buyer to kind of keep an eye on it. Average price point, we did see our average price point move up slightly this week over week by 20,000 to 1.242 million. And our median price stayed kind of the same at 750. Now, that's not what goes pending. So when we look at pending, it's going to be substantially lower. Now, this is one thing that was very interesting to me. So days on market, average is 67. However, you've got long listings, you've got short listings. I really like to focus in on the median because the median is going to tell me, hey, what is actually happening? And so the median days on market actually went up this week. It went up by 1. Now, if you know anything about the Austin real estate market and most markets in general, you get a lot of new listings that are going to hit the market. And so that pushes your median down. Now, what kind of makes your median go up is if listings are not coming off the market. And that's I think what we're kind of going to run into, which is why people do price reductions. So number of listings with a price reduction as of Wednesday, 1,330 had a price reduction. To put that in perspective, we went up another week by 0.31%. So we went up to almost 45% of our listings had a price reduction. 3 weeks ago, we were at 41%. In December, we were at 57%. So we are going in the wrong way. We're having more listings coming and hitting the market, that's good as long as we're having buyers buy it. But there's more hitting the market. Their median days on the market is going up, as well as we're seeing more price reduction. So this could be a warning sign to say, hey, what's kind of going on in Austin? What I will say though is, before I scare everyone, Austin is very, very specific about its neighborhoods and its zip codes. I can tell you there are some areas where things are still flying like hotcakes and things are in multiple offers. It just depends on your zip code. So if you're a seller or you're a buyer, don't just take this information. Reach out to me and let's talk about your specific niche area. This is just a general Austin. You got to go niche down. So with that, the number of new listings that came out in the past 7 days, you can see that 410 new listings. So it's actually a decrease from last week. So last week we saw 434. This week we saw 410. The big thing is we're going to want to have more houses pending, which is going to help us there. 23 of them were relisted. That's either them coming back to the market, or maybe they went under contract and came back on after that. You can see the average price point, and that's kind of why we moved up here. Of these 410 listings, they were significantly higher, and that's kind of pushed it. Now, this is where I really get into the nuts and bolts. Also, if you're just joining me, I'm Danielle Marie from the Fountain. I own the One Realty out here in Austin, Texas, with my partner Side. And with that being said, feel free to save this, follow me, so that if you can want to see this in the future, you can find me again here in Austin. So with that being said, the number of pendings, we did go up. We're at 972. I went back now. That was a 41 increase week over week. So not bad, but if we go back to where we were last year, we were a little bit higher as far as our net pendings. You can see this is the big thing. We almost had a 10% increase week over week. We did have 10%, exactly 10%. We went from 200 new pendings to 220. And when I say new pendings, I mean this is from the 2nd of April to the 9th of April. I always do it Wednesday to Tuesday because it kind of figures out what, from the new listings also to what went under contract over the weekend, how many listings are going under contract in that time frame. Now, I will say that this is an increase from last year. So last year, we'd already kind of hit our peak of the amount of listings going under contract per week, and we kind of started to go down. But that was because of interest rates. So let's talk about that. Interest rates last year, we were kind of in our lows really in February. We saw a little bit drop down here and there in March, but by April, we were way up. And so what ended up happening is we saw about a 30-day lag as far as demand. Like we still, even though when rates went up last year, we still saw demand for about 30 days. And a lot of times those are buyers that are actively already out there. They're already approved. They're kind of like, hey, they're already in the process, versus people starting and kind of stopping. So it will be interesting to see if that trend continues this year. So what I would say is if we see more listings go under contract this next week, it's kind of showing you, yes, we're seeing buyers that are still kind of out there. Last year with interest rates going up, we kind of hit our peak number of buyers, and we kind of actually slowed down our market a little bit starting in April last year. With that being said, our average price point and our median price point, very similar to where we were last week. So $855 for our average, our median at $645. This also goes back to when we look at sales and we look at closed, this kind of gives us an idea of what is about to be happening. And that's because we're going to look at like closed price to list price and closed price to original list price, kind of gives us an idea. The closer we are in closed price to list price, so I think our median, we'll talk, is like 98%, 99%. It means that we're going to see these averages start to go up in our actual closed data. We're going to see those numbers tick up. If it was closed price to list price was further down, then we're going to kind of see the price points drop as well. So the other point that I'll point out here is if we look at our days on market. So we talked above at our new listings, and we talked above our new listings, our days on market started to go up for the median. We're seeing our median did not change. It did not go down, which also kind of gives, normally you're going to see the pending, you're going to see the median go down even more than the listing, because you're seeing people that the house hits the market, people buy it immediately. If it's a good house, it's going, versus people waiting for negotiations. Here, right here, we're seeing is that houses are hitting the market, but people aren't necessarily taking them immediately. It's taking a little bit more time. With that being said, this is kind of the positive still, is the number of listings with a price reduction. We went up by 10. However, our percentage of houses that went under contract with a price reduction, that continued to go down by almost another 0.5% to 34. What that is also showing us is that that's just still showing us that people are buying as soon as it hits the market. The number of price reductions, typically people are priced, depending on where you are. Some areas it's like people are price reducing at like 16 days. There's other ones that are 40. It just depends on what market you're in and what neighborhood you are in. And that's what we talk about your strategic options. We're going to look at, okay, if you're going to do a price reduction, when are you strategically going to do it? How many days does it typically take to get your house under contract after a price reduction? As well as what is the average price reduction in that area? That's kind of going to give you a lot of data when you're listing your house. Now, we're going to list it correctly, so we don't have to have those price reductions, but we're going to talk about that. So the next thing right here we're going to see is our closed sales. So Granted, remember, this was a few days ago. Our closed sales at 649. That's kind of abysmal. If you watched my video on what happened in the month of March here in Austin, I will say the month here of March was really bad, and we're going to talk about that in a second. When it comes to the total volume, like the number of sales, we're going to talk about that. So we are seeing that that's down. Now, nothing really changed for your average price point and your median. So this 833 and 620, those are your prices. If we kind of look right here at our average and median price of what's happening right here, 855 and 645, you can expect this number to continue to kind of go up a little bit, especially, and this is why it goes to this, especially if we look at close price to list price. So these are list price, close price to list price. They're closing at 98%. So if we're closing at 98%, to take another 16, let's call it 17 off, where are we? Well, that's like taking that, we're going to end up right around just a few grand more if we're doing that median. So we'll see it maybe go up to like an 835, nothing major that we're going to be seeing. Now, the other thing that we're seeing is our days on market went down, continued to go down on these two. Now, you have to remember, sales close data is typically goes pending 30 days prior. So I'm going to expect this to kind of look a little bit better just because this is what happened in March. And that's when we first kind of saw buyers coming back a little bit more. We saw rates kind of going down a little bit. And then before all the uncertainty happened in the everything from the stock to the bonds, everything, the markets these past couple days. So with that being said, we're seeing our close price to list price, meaning what it's currently listed at. The average is 97.44. The median is 98%. So you're looking at anywhere from 2 to 2.5% is kind of what you're expecting on houses. Now, that also depends on when it is listed and when it's going under contract. If it is going under contract immediately, you also might see stuff going over list price. If it's been on for 3-4 weeks, that's going to change things. Even 2 weeks, you might be able to get a good deal. Now, the other thing is the close price to original list price. And you can see week over week, not a big change here. But close price to original list price, you're seeing you get about a 4% discount off the original list price. For the average, or for the median, the average, you're at a 5.3% that you're seeing there. So, okay, we could take a deep breath. So if I'm going to sum this up, if you have just been joining me, kind of my big flags that I'm seeing right now, and I'll rescoop it, I'll recap it, and then we're going to talk about where we are monthly. So we're going to talk about April's numbers. We're also going to talk about March's numbers and what they look like. So just to kind of give you the, hey, here's Danielle's warning signs. Here's what I'm seeing. Number one, our active inventory is just absolutely dumping in. Like we're just getting a crazy number of active new listings. And the number of active new listings coming in compared to the volume of what's going pending is substantially less. So you can see right here, we had 410 new listings and our new weekly pending was 220. So I mean, that right there, you get 190 difference right there. That's just going to kind of stack on top. Now, give or take, because some people are going to take their houses off the market, you do have people that are listing it for sale and also listing it for lease. And so the lease might get taken, so that inventory might go away. Different things like that are actually happening. That being said, I'm seeing an increase in inventory that is outpacing our number of pendings. I'm also seeing our median days on the market did go up. And at this time of year, we shouldn't really see median days in the market. We should go up. That should probably start more in May. So about a month from now, we should start seeing a little bit more of that. And then the other thing is the number of listings with a price reduction is starting to climb. It's climbed for the past 3 weeks. 3 weeks ago, we were at 41%. This week, we are at almost 45%. And we're going to hit over. We are going to start talking about the monthly, about April, March, and April. Do me a favor, if you are watching this, give me a like. Also, share or follow this so that other people can see this information, and then you can come back and find it. Okay. So here we are. You know what? I'm going to skip down real quick. We'll talk about the dirty. We are going to talk about how, unfortunately, dirty March was. So first and foremost, you can see this, 696 homes that we sold in March. If we're going to look at our historical average over the past 20 years, this is the lowest number of sales we have had in Austin. Lowest number of sales, single family home sales in the past 20 years. So even since 2005. Like we're talking '08, we're talking about 2020, 2019, 2020, 23 when we first started. 2023, we were at 718. We are even lower than that, which is kind of scary. Now, our average sales price and our median sales price, they both went up. So almost 3% by one and 4% for the other. So you're seeing that we're at 820 and 618. And if you remember, so that's 820 and 618, that we are at, if you look at our rolling 30, we're at 833 and, I'll put it up, 833 and 620 here. And so you can see that, hey, obviously we're probably going to go up. We're seeing that. But you will see our days on market, and this is all compared year over year. So this right here is comparing year over year. I also like to compare month over month. Now, month is seasonality. You're always going to have a seasonal trend for if one month is going to be better than the other, just based on, are you going into the buying season? Are you leaving the buying season? What's happening? You can see, as expected, that our month over month is better because typically stuff that closes out in March went under contract in February. There wasn't as many buyers, different things like that. So you can see all of our numbers month over month, we are fantastic. All of our numbers, we're seeing an increase in as far as closed price to list price, closed price to original list price. We're seeing that this month, so it's still kind of very similar to what we're seeing on our 30-day, like 96% and 98%. So we're seeing month over month, great numbers. If we look compared to year over year, this is where it gets interesting. So you're looking that we kind of trended a little bit worse as far as our percentage wise for closed price to list price in March of this year. Now, March of last year was closing February of last year, and February was like their best month before interest rates came in and hit them. So we're going to look at April's data. Now, so April, we are at 205 houses that are sold, and we are, 30% of the way through the month. You can see that our lowest month was 731 in 23, and you're going to see our average for the past 20 years was over 1,000. So 1,012, 1,048. Our high in '06 was 1,330. You can kind of predict to see kind of where and how many houses we're going to sell based on like what is currently pending. And what I can tell you is based on what is currently pending, it's not that great because our currently pending, we are still below 1,000. So we're not going to there's no way we're going to get our average or median. We're not going to get those. We're just trying to beat this low right here. Now, with the mending, so if we go back to like what we have pending, we've got 972. I think it's going to be very possible. I think we'll beat the 713, to be honest. A lot of stuff starts to come in right at the end of the month. I think we'll beat that. However, it's going to be very touch and go. If you see our average sales right here was 849 and our median sales was 600, it's kind of where we are right now with these 205. I have a feeling that we're going to see this drop down a little bit. And that's just based on what I'm seeing with what's currently pending and what we've seen in the 30 days. So I would not be surprised if our month over month, a year over year, because this is year over year data, because here it is right here. Last year we were 839 and 624. I would not be surprised if we end up maybe 1% or 2% less. Like that I'm calling that now. If people start continuing to price reduce, based on what I'm seeing, what's currently pending, I can kind of see this being a little bit less month over month. The other thing is, so average days on market, we are higher. Our median is lower by 3. So kind of, I say very similar in that. The other thing is closed price to list price. You're seeing like right now for April, which I'm not surprised at, we're at 99% is our median closed price to list price. So it means the middle house that is being sold out of all of this houses, 205 houses. So we're talking about house 102 and house 103. They are selling at 99% is kind of where they're selling. So either higher or lower, but that's very good. And you're going to see that's very in tune of what happened last year. You can see it's the exact same of last year. Our closed price to original list price is at 97%. Same thing as last year. So what this is saying is we are kind of seeing everything similar to last year. However, that rolling 30, that what we've been talking about, I would not be surprised if year over year, we might slightly beat this 839. But if you look right now of where we are, we're at 833, and our average is 855. And so I think we're just going to be right in those numbers for next year. I think we're going to be very similar with that. And with that being said, you can see our month over month, everything is great, green right over month, except for you can see our median sales are down. And I also say that part of the reason that our median sales price is also going to be down is the buyers that we're seeing right now aren't necessarily like, we're seeing I've actually seen quite a few first-time home buyers, which is very interesting. It's kind of like they've accepted that interest rates are what they are. They weren't looking in 21. They weren't looking in 20. They didn't know interest rates when they were 3% or sub 3%, 4%. All they've known is honestly high 6s to 7s. And so those are the individuals that I've seen a lot of them looking. And so I think that's very interesting that we're seeing lower numbers as far as our median price point. Now, I will say we didn't talk about this historical average down here, but you can see right here, we underperformed by 27% historical average. What does that mean? Well, that means that there's probably pent up buyers, and we've had that for the last 3 years. So it's one of those things that once Austin starts moving, which we kind of saw that early on in this year, but it kind of just like came to a screaming halt. Once Austin starts moving, it's going to be very interesting because of how much not underproduction, but as far as sales being below like what our historical average that we're seeing. And even this historical average and median, you have to think, we're also keeping in mind those numbers that happened in 22, 23, and 24. So that's going to kind of shift things a little bit. So with that, I'm going to go pull this out. Overall, I would say I am not bullish on Austin right now. And I say I'm a real estate agent, and so maybe I should be trying to convince everyone to be selling their house. I am going to say I'm not bullish. I'm not bearish. I'm cautious right now. And so when you are looking to list your house, really get in some deep dive numbers. Let's talk about your strategic plan. What do those numbers look like? Where are you actually listing your house in regards to the buying season? We just had a client actually reach, it was Monday. Reached out last Monday, and I was like, look, we've got to get your house on ASAP. We took pictures, we staged it, we did everything we could. We got it on the market last Friday. We had showings on Friday. We had showings on Sunday. We didn't have it on Saturday. And then we had potential offers that people said, hey, coming in. Had some more showings during the week. We got an offer on Wednesday, and we negotiated. We let everyone else know that it was kind of saying, hey, they're going to put an offer in. Went back and forth with some. And at the end of the day, we got under contract today. And I will say we're so thankful because of the fact that we beat the interest rates. So she had people seeing it before this huge spike this past week, where today we're over 7%. So you really, really want to do some due diligence, not about just throwing your house on the market. It's like, what is working? What is in your area? What is the saturation of it, to really understand? And for buyers, this isn't true for all across, because there are some areas that are still really hot, but then there's also some areas that there's some very good opportunities. So with that, my name is Danielle Marie. I'm Danielle Fountain, actually, from the One Realty, founder of the One Realty out here, partner with Side Inc., if you know who they are. And I am here. I take a data-driven, all-in-one approach to real estate. And if you have any questions, you can find me at the_one_realty on X or Twitter. You can also find me, if you look up www.theonerealty.com, you're going to be able to find me, or just Danielle Fountain, Austin Realtor. So with that, I hope you have a wonderful day. If you have any follow-up questions about the Austin market, or actually the markets around the area, we do tap into all of those. Just shoot me a message, and I look forward to seeing y'all next week.